So when we've made like new lows, like you know how the market moves, right? The market moves, it moves like this, right? It makes a new low, makes a new low, makes a new low. So when it makes a new low on a higher time frame, you're looking for a reason to long it into this, right? Okay, like, so you're looking for this on the bigger time frame. So when it's made a new low and then you flip over to the smaller time frame, smaller time frame, you're looking for a turnaround point. So it was coming down, it made new lows, gained the 15, left gaps. This is really as simple as that, man. Like that's how simple it is. Like you don't need to make it any more difficult than that. So the next time the price approaches this order block, you're gonna want to buy it. Maybe you want to front run it and front run some here. Maybe you want to put some in the lower gap too. I'm a big fan of DCAing the entry. So when you enter your orders, a little bit more, and the most down here. I used to buy it all the way down to the stop. Like, so if my stop was here, I'd be putting huge orders in down here, like massive orders, because like it's going to be like $10 if you get stopped out on this order, right? And if it doesn't get stopped out, you're going to make bank. So really, that's all you have to think about. You just need to need to be capturing moves on which way the market's going. So once you figure out which direction it's going, made new high. When it's down in this area, on this swing, you want to be looking for areas to enter and targeting above here for most of the order. Big problem that new traders have will be to exit their positions early, you know what I mean, and not play the trend how it's supposed to be going. You need to play the bigger time frame trend. Anybody making any real money in this game is playing the bigger time frame trend, like an hour. Or now if you're trading futures, it's a little bit different. But you still do it the same way, right? Like you still play the hourly as your big time frame, and you enter on 5 minute or 1 minute. But so it's done the exact same way. It's just shrunken down a little bit, right? Really, you just need to try to figure out what the next candle's going to be, man. Like what's the next couple big time frame candles going to be? Once you can figure that out, then trading becomes a lot simpler. It's also different ways. Like I'm just telling you the basics of price action. There's like distribution phases, there's accumulation phases, there's different patterns. And like when I say I just trade price action, like doesn't mean these other patterns aren't real. You know what I mean? Like a bear flag is still a pattern that happens, and it's legit, right? So it's coming down and then it makes a bear flag and then goes like this, right? And then goes. So not saying that the like entries like this don't work or whatever. I'm just saying that the better entry would have been down here, right? Because the market would have moved like this, right? When you see the market going like this, up like this, and it's going like this, this is a pattern that it's going to dump, right? You don't know when it's going to happen, but this is a pattern for it to dump, making lower highs or making like not as strong highs. There's all kinds of different stuff like that, but really, honestly, that stuff is not even close to as important as the price action and entries and exits and liquidity and gaps. You don't even really need to know about that stuff if you don't want to. It doesn't really matter too much.